guys, what's going on? Jebb here, and in today's video, we are going to be talking about the conflict going on in the Ukraine with Russia. As you guys are probably aware, the last month and a half has been relatively tumultuous for Eastern Europe, and over the last 24 hours, Russian troops have moved into two separatist regions in Eastern Ukraine, known as the Donbas region, and that is escalation. We're going to be talking about what's going on in Russia and Ukraine over the next hour and a half here, and we're also going to be talking about how it's impacting stock markets, how it's impacting the equities markets as a whole, and also how it's impacting the cryptocurrency markets. As of right now, Bitcoin is currently trading at $37,600. Geopolitical uncertainty has caused a major drop in the stock market and in the crypto markets. We've seen north of nearly $10 trillion in market capitalization wiped out from global markets, and we've seen multi-hundred billion dollar losses in the cryptocurrency space. We're going to be talking at length about what's going on in Russia, how that may affect crypto, and then talking about where our support and resistance is for the Bitcoin market, and talk about what the next 2 to 4 weeks on Bitcoin may look like. Are we going down to $33,000 as a result of geopolitical uncertainty, or is all of this just FUD, and we're going to see Bitcoin actually institute a major rally and push us all the way back up to $52,000 relatively soon? We're joined, as always, by TA Tim. How you doing, Tim?
What's up, everybody? It's it's an okay day. I wouldn't say great. Wouldn't say bad. It's okay. Didn't work out this morning. First, Smay weenied out on me, and then I weenied out myself. So that's not a good start. But, I'm here for the rest of the day. I'm excited about the show, even though it's not exciting for crypto, but I'm excited about the show.
Well, you got a cool hoodie.
Yeah, you really like this hoodie.
I do like that hoodie.
Get you one.
I want a hoodie like that.
Yeah,
I would love
like
a hoodie
it.
like that.
I like it.
That's a really good looking hoodie. We're also joined, I believe we're joined, as always, by Kelly. How are you doing, Kelly?
I'm excellent. I took the late night flight back here to New York City. So
here
I am back with my wife. And here I am back with the money tree as well. A lot of you are asking about this, and hopefully this will be a good indicator that the market's going to rally. We won't know, but we got a lot of stuff that we're going to be diving into today. A little bit of bullish news, but really we want to dive into all this geopolitical kerfufflery that's going on around the globe, and how that's impacting the markets, and what we can do about it, and how we can see our ups and downs, and where we're going to set our targets. But let's just dive into this. Let's talk to Smay, see how our knight in shining armor has been. Where was he this week?
Absolutely. Smay, you're back, dude. Where have you been all this time? Where have you been all my life, Smay?
Guys. I was at my, I'm touching the mic because I need to adjust it to my face. So
Wow.
You need to stop talking to me about it, all right? It's not a problem. I need to be able to move it towards my face.
Don't at him.
Because, look, I just want to say, I want to squash this beef here, guys. I have a keyboard here and buttons, right? And so when I'm talking to it, I have to move the mic to my face to talk. If I leave it where it's at, I can't see my buttons, okay? So leave me alone. But I would like to take this opportunity to say I'm back. I'm feeling refreshed, and it's great. And I would like to take this opportunity to share my good feelings with everybody by reading their names.
Woo.
So the names I have here to read, I have, let's see, we have Adam Rourke. We have a new Jedi youngling, Johnny Lacaze.
Shout out to you, Johnny Lacaze.
Or whatever. We've got Crypto Couple. We got Mike Markle. We got Grand Roofing Incorporated. We got Thomas Post. We got Alexandre Ignacio. Lucas Jaskowski. Oh, he got me with that one. Air Crypto 420. Oh my gosh, Dennis Pizarka. Oh my gosh, I love you guys so much. You guys are the best.
They're loving your vest. They're loving your vest.
I was petition to change his Twitter handle again to Smay Rogers.
Smay Rogers.
Smay Rogers.
Smay Rogers. I love that. Guys, we got a lot to talk about here today. Let me just run through some of the stories we're going to be talking about. Lightning Network has hit an all-time high despite the sinking markets. We're going to talk about Lightning. Canadian regulators are demanding exchanges not to promote self-custody wallets. Very interesting. We were joking before we went on air how Justin Trudeau, the PM of Canada, has just become the director of marketing for the Bitcoin and the cryptocurrency movement. So thank you very much, Justin Trudeau, for your kind donation of your time and resources and influence towards the brand awareness campaigns of the broader Bitcoin markets. Deutsche Bank reports showing major crypto investors will HODL regardless of a drop. We're going to talk about that. And we're also going to be updating you, as I said, on the Russian-Ukrainian conflict. We're going to talk about how a major pipeline that has just been laid over the last couple of years, called Nord Stream 2, multi-billion-dollar natural gas pipeline that connects Russia to Germany, has been sitting dormant for 5 months, awaiting Germany's energy sector to approve it through regulatory channels. The Chancellor of Germany just basically said, nope, we're not going to approve it, and Russia just lost that entire pipeline, spent all the money laying it, and now they're not going to get to use it. Sanctions are heating up. As I said, Russia has just moved troops into the Donbas region of Ukraine. This is everything short of an invasion right now. There are a lot of people calling it that. The U.S. President U.S. President Joe Biden, has not called it an invasion just yet, but that's kind of what it's looking like. We're going to be diving into all of that and more. You might be asking yourself the question, Jeb, what does Russia and Ukraine have to do with Bitcoin and crypto? That's a fair question, so I want to break it down for you really quickly. Whenever there's geopolitical uncertainty, that has a major implication on the traditional markets, on the equities markets. Whenever you see the stock market go through a major correction, you also see cryptocurrency markets go through corrections as well because of the correlation. We're going to look at the S&P 500 and the stock market here in a little bit and take a look at how they are down about 10% ever since this Russian-Ukrainian conflict started heating up again over the last 45 days. And we're going to compare how the stock market moving has impacted the crypto markets. So if you're asking the question, does the Russia-Ukrainian conflict have anything to do with the Bitcoin and cryptocurrency markets? I say absolutely it does. It is absolutely vital that you understand this, which is why we're talking so much about geopolitics as of late. With that said, let's go ahead and jump onto CoinMarketCap here and take a look at the market. Before we do, though, I do want to mention to you guys that today's episode is brought to you by iTrust Capital. If you want to invest in cryptocurrencies using your IRA and your other retirement accounts, the number one-stop shop place to do it is with iTrust Capital. It's a phenomenal platform, so make sure to check it out. The link is in the description box down below. Anyway, over the last couple of days, we have seen a lot of instability in Bitcoin's price. If we look at Bitcoin, we can see that it was trading up here, looking pretty bullish at $45,000. It looked like we were going to break up above 46K. We were going to rally to 52. All was going to be great. Unfortunately, we have seen FUD story after FUD story after FUD story ever since Valentine's Day, and we've seen Bitcoin drop from $45,000 down to a local low that was set last night at $36,000. $8,000 to the negative. We have entered into a falling wedge. The good news is falling wedges traditionally break to the upside, but the question on the table now is, are we going to break to the upside just to form a bear flag and push down to 33K? Well, we're going to be talking about that a little bit later. I just want to give you a brief update on the price so that we can look at the altcoins. Ethereum is down 0.39%. Binance Coin down 0.66%. Cardano dropped below $1. This is one of those major updates. We're actually going to be making a video this afternoon on ADA. I've warned you guys how I thought that Cardano would hold $1, but to be honest with you, with the way that the rest of the markets are moving, there was always a very large possibility that ADA would drop below $1. And you know what? Good. You might say, Jeb, why would you say good? That means Cardano's down 75%. Why would you say good that it's dropped below there? Don't you know that my bags are hurting? I do. I understand that. But I also understand that Cardano is starting to surpass Ethereum and Bitcoin and Litecoin and more on transaction volume, and it is the most highly developed, most rigorously tested blockchain in the history of the entire industry. So the further it drops, the more I will be buying. So I'm actually very excited that it's down 20% on the last 7 days, because believe me, it is going to make a major comeback, and you're going to wish that you had bought at sub $1. Solana's down 7%, Solana's down 4%, Luna up 6%. Terra Luna is actually doing a very good job through all of this. We made a video yesterday on Luna. I broke down its price action. I also talked about how its price action is linked with Bitcoin. We're also going to be doing a fundamental video on Luna here before long. Looking at the biggest gainers and losers, then I'm going to throw it to Kelly, and we're going to look at some headlines. We got Anchor Protocol up 10%, Luna's up 5%. Everything else is pretty much neutral or down. Nexo, FTX token, Helium, these are some pretty solid projects, all up about 1%. Otherwise, we got Waves, XRP, Gala, Theta Fuel, Neo, Stacks, Convex Finance, Harmony One, a lot of other projects down nearing 10%. So overall, cryptocurrency market getting shaken out, I would say mainly as a result of Bitcoin dropping, and I would say the reason Bitcoin is dropping is as a result of geopolitical instability. So I say again, if you're wondering why we're talking about what's going on in the Eastern Europe, in the Eastern bloc of Europe, if you're wondering why we're talking about geopolitics, it's because I believe that the Russia-Ukrainian conflict that is now heating up is the #1 contributing factor to the last 7 days of price action on Bitcoin. With that said, I'm going to go ahead and throw it to Kelly. He's going to run us through some headlines, and we're going to talk about what's going on in Russia with a little bit more detail than we have recently. We're going to break down all the facts, bring it to you, and tell you what we think is going to happen next. So, Kelly, take it away. Let's see what's going on in the rest of the world right now.
All righty then. Well, first thing I want to do is we have all this, uncertainty going around with the geopolitical stuff that we've been talking about here, especially with the Russian-Ukrainian conflict. But before we get directly into that, which is going to be our major focus of our conversation, I'm going to take us through a couple of the bullish things, because there are still a lot of bullish things happening in the underlying market, shaping the fundamental space. So I'm going to take you right there now. So here we are. Lightning Network is, if you don't know, Lightning Network is it's essentially a layer 2 protocol on top of Bitcoin that allows very, very expediently fast, nearly no fee, very low fee, if any fee, transaction ability for Bitcoin. And the Lightning Network just hit its all-time high for basically the Bitcoin locked in Lightning Network. So this is growing at a expeditious pace here. And as you can see here, the growth's primary driving force has been the technology's ability to facilitate fast, efficient, and cheap transactions on the Bitcoin network. So there's a lot of things developing in the background here, especially with the Lightning Network. And this will be something that will be incredibly important in the future as we actually try to use Bitcoin not only as a store of value, but also transactability, so it can compete with other major payment processing systems, other rails like credit and ACH and Swift and all those. We already, of course, passed the speed of ACH and Swift, but we still fall way behind like stuff like Visa and MasterCard in terms of transactability. But with Lightning Network, we actually surpass it, and it's cheaper, faster, and just more efficient. The next one, and I actually think this is a bullish story. Canadian regulators demand crypto exchanges not promote self-custodial wallets. Now, why do I think this is bullish? Because essentially the main narrative of Bitcoin is the fact that your ability to be your own custodian of your funds. And this is something we talk about on the channel all the time. We really want to support people's ability to become basically financial sovereignty, and having custodianship of your own assets is as case in point. And Brian Armstrong here, you can see this is the CEO of Coinbase. He's one of the founders, and he's one of the biggest proponents of self-custodianship of anybody out there. And he's obviously the CEO of Coinbase. And he's even, out here sharing his thoughts about it and actually still promoting the self-custodial wallets. And we also saw the tweet that we shared yesterday. I'm not going to bring it back up. I forget which wallet company, but they basically wrote a letter directly back to, I think it was like the Superior Court Justice of Ontario or something like that, basically telling them, no, we can't give you a list of the people. We can't limit their wallets. This is by nature something that is built into the intrinsic operation of the intrinsic build of Bitcoin. So this is why you mentioned Trudeau being a VP of marketing, because these sorts of things is actually pointing out the fact of how important Bitcoin is and is going to become even more deeply in the coming months and years and decades. The next thing here is this is a report from Deutsche Bank. And the main point here was just this blurb right here, which basically synopsizes the whole article. It's interesting to note that note the deep bullishness for cryptocurrencies, even in an extremely bearish crypto market in which values were to drop 80%. Less than half of investors say they would reduce their investments or exit the market. That is bullish. If there's not anything bullish at all, that is incredibly bullish. It actually marks a bit of a shift in the psyche, in the mind, and the trend of how people are approaching crypto assets, especially Bitcoin. We've seen the market go all, parabolic top and then crash all the way back down twice now. And so I think people are starting to catch wind, seeing the people that have held through those times have actually made more money than most traders. And so it's those winds are starting to shift in the general mindset. And in a little bit, when we get into TA, I have an on-chain metric that is going to exemplify this point and really support this bullish narrative. And then the most important story that we really want to dive into here is Putin ordering troops to eastern Ukraine, which is obviously drawing condemnation and calling for an emergency UN meeting. But this right here, it says Russian President Vladimir Putin ordered troops to Ukraine on Monday, just hours after he formally recognized, and this is important here, hours after he formally recognized the independence of two Moscow-backed breakaway regions in the eastern part of the country. So my question for you is, Jebb, do you think that all of everything that's happened so far in terms of this Russian-Ukrainian conflict and all of this sort of turmoil that's going on there. Do you think it was posturing in a way? Because right now, it looks like he's accomplished something that he wanted to do, which is, basically reacquiesce, reabsorb those parts of Ukraine. And he's been able to do it now without really putting troops on the ground with bullets in the air, right? So now he's recognizing these regions and reabsorbing them into the Russian control. So I'm just curious what your thoughts are on this, and why do you think the markets are reacting the way they are to this story?
So the thing you guys have to realize is that when Putin came into power, it was less than after he came to prominence, I should say, it was less than a decade after the collapse of the Soviet Union. The Soviet Union used to control all of Eastern Europe, Ukraine, Belarus, the Baltics. They controlled or the Balkans. They controlled all of the Baltics. I always get those two confused. Anyway, the point is, he doesn't like that they lost control of Ukraine, that they lost control of Belarus, that they lost control of Kazakhstan and all these other nations. The Soviet Union used to be much larger than it is, and Putin's insecure. The thing you got to realize about Russia is that Russia, not the people, I'm not talking about the Russian people, but I am talking about the Russian government, is very insecure about itself, as always has been. It's very similar to North Korea. It's insecure because it knows that it doesn't have anywhere near the power of the United States, NATO, and the rest of the United Nations. The reason that they're doing what they're doing is because Putin wants to reestablish himself as a global superpower, because he has never had the luxury in his eyes of being that. He wants Russia to be a superpower, the likes of which the Soviet Union was, and it's just not. The thing a lot of people don't realize is that Russia's economy is actually pretty small. Italy has a larger economy than Russia. The state of New York cut its GDP in half and it's larger. The New York City, I think, actually has a larger GDP than the entire nation of Russia. Don't quote me on that, but I believe it does. I want to say the GDP of New York City alone is about $1.5 trillion. That's about the size of Russia. It is not as rich and powerful of a nation as a lot of people think it is. That being said, it is a very serious threat. And what Putin is trying to do is he's trying to position himself to retake that prestige and that respect and that fear that the Soviet Union had before he came about. And that's why Crimea got invaded in 2014 with the separatists, and there was the very sad protest where a lot of people got hurt and injured, and worse than that. What Putin is doing right now is he's trying to figure out how to retake territory, one, because he wants to establish himself in the region, and two, he also wants to retake his prestige. That's what he's doing. And he also believes, I believe he's not just saying this, I believe he actually does believe that Ukraine is a false state and has no right being an independent nation in its own right and belongs in the sphere of control of Russia. So what Putin is doing right now, let me just back up and break down the whole story. 2014, Crimea gets taken. You guys probably remember that. That was February 2014. Then moving through the entire year of 2014. And then over the last couple of months, what's been happening is that there's a region called Donbas in the eastern part of Ukraine. And what just happened yesterday, the news that we're breaking here or that we're talking about here is that I can't speak, Slavic is not a tongue that I'm very familiar with, but Donetsk and Luhansk are two regions, two territories, two separatist territories that rose up and said, hey, we're our own little republics now that we are, and we want to be with Russia. So what happened over the last 24 hours is Russia moved troops into those two parts of into those two territories, which are part of the greater Donbas region. And what we've also seen is that Putin made an announcement, made a speech a while back, yesterday I believe it was, getting all kinds of excited, very fiery, very kind of scary talk this seeing out of a world leader who's trying to invade somewhere, basically saying Ukraine is a false state and they have no right being, independent and sovereign, and that they belong in the control of Russia, and that it's formerly Russian land and Russia has claim over it, is essentially what we've seen happen. So the reason that this is important, to answer that question, is that whenever you see geopolitical instability, that leads to fear, uncertainty, and doubt in traditional markets and in equities markets. I wouldn't say that what's going on in Eastern Europe is actually having that big of an impact directly on Bitcoin, but I will say it's having a major impact on equity markets when we see the stock market being down as much as it is. I'll just show you right now. Funnily enough, the stock market, S&P 500, is actually bouncing over the last 18 minutes since it opened. Yeah. It's been closed over the weekend. It was closed for President's Day, so it just opened 18 minutes ago. Opened at 431 over here on SPDR, S&P 500 ETF. That's why I normally look at. It's up 0.38%. But if you zoom out, Ever since we started catching wind of what's going on in Russia and it's become a story, we've seen it drop 10%. When the stock market drops 10%, guys, you got to realize U.S. equity markets are worth nearly $50 trillion. So it dropping 10%, that's $5 trillion in wealth gone. A lot of that went out of Facebook. Sorry, Meta. But we also see that global equity markets are worth about $110 trillion. We've lost $10 trillion in market valuation ever since Russia started positioning the way that it has. You've got to realize how important that is. When you lose $10 trillion of global markets, that's half of the gross domestic product of the United States. That's the entire gross domestic product of Japan and Germany combined. So what's going on in Eastern Europe might not seem like that big of an event yet. It might seem like something that's going to become a big event, but it might not be that big of an event yet. It might seem that way, but I guarantee you it is, because you can basically directly attribute $10 trillion worth of equity markets disappearing in a flash to what's going on over there. Then the other impact that you have is that now we're talking about the Federal Reserve and other regulators and other people that are in charge of monetary policy starting to become more dovish on the interest rates and on quantitative easing and keeping up the low interest rates, keeping up the quantitative easing. That leads to the inflation of the dollar. So there's a lot going on here. Whenever the dollar starts doing poorly and starts getting inflated as a result of uncertainty like this, whenever the stock market goes down, you see it have a major implication on Bitcoin. And we're about to do about 20 minutes of technical analysis on Bitcoin, so don't worry about that. But I do want to throw it to Tim. Tim, what are you seeing going on here in Russia? What do you think Putin is actually trying to do? Because analysts in Eastern Europe are saying, no, he's not trying to invade. Analysts in America are saying, yes, he's trying to invade. Joe Biden doesn't really seem to know what he's doing. Joe Biden has talked to him. He won't say invasion. He sometimes thinks that they're about to move in days. There's a lot of confusion coming out of the White House right now. What do you think Putin's actually trying to do here? What are his motives?
Well, I mean, theoretically speaking, he has crossed the border. He is in Ukraine. Whether he thinks he's in Ukraine or not, he's in Ukraine. You know, so do with that what you will. We talked about it in our planning meeting this morning. I think where Putin is trying to get away with on a technicality is because he's recognizing because he's recognizing the independence of those territories. He is saying, I haven't invaded Ukraine. I just walked into an independent nation that wants us to be the leader. It's a lot like the kid on the playground who runs around poking everybody, and when the kids are screaming, stop touching me, he's like, well, technically I'm not touching you because I'm wearing a glove, so my finger never touched you, I touched the glove. And it's like, okay, you know, that's Putin, you invaded Ukraine. Now, here, the reason I say it's important is because he did cross in the territory. But in his mind, I'm not in his mind, but in his mind, he doesn't think he's invaded Ukraine yet. So before people freak out and say war is imminent, in his mind, it still isn't necessarily imminent. Now, he might have we talked about him playing chess, whereas other people playing checkers. Maybe he already knows the next couple of moves. I still think, you know, people who are afraid that World War III could break out of this, I just don't see World War III happening. I think a lot of other people do not see World War III happening over Ukraine. What's scarier is what could potentially be happening as a smokescreen with China. And I know Jebb's going to probably talk about that here in a little bit.
I am.
But I don't think... We've seen this over the last couple of years, and you guys know this. We always see a story in the news come raging up, and everyone wants to look at that story. And meanwhile, there's something happening over here, and nobody's paying attention to it. I think potentially we're seeing something similar happen. And when it comes to price action, here's what I'll say. Remember back not that long ago, maybe like 2 or 3 weeks ago, in anticipation of the Fed news, I guess it's more than 2 weeks ago, it's more like a month ago. In anticipation of the Fed news, the price dropped, and then the news came out, and technically speaking, the news was kind of hawkish. The news was saying, yes, guys, we're a little too inflated. We're going to, in March, start raising interest rates, and that was hawkish news. What happened to the price? Nothing. The price actually had dropped in anticipation. In the same way, guys, the price didn't drop after the news broke that Russia had actually moved into Ukraine. The price actually is rallying. Why? Because I think a lot of the price drop and the price action happened in anticipation. And now that it happened, it's like, okay, well, we already sold. Everyone who wanted to sell due to that had already sold. All the longs that got liquidated had already been liquidated. There's not a lot left for it to move down right now. I do think the price is going to go down. We'll talk about that in technical analysis here in a little bit. But the reason why there wasn't a huge price drop right after the news broke is because the price drop came before the news. What's really interesting is to see the next couple of days play out, to see what happens with, now that they're technically in Ukraine, what happens there? Do they keep advancing? What happens when Biden goes to the platform and tells everybody that the whole government in the United States is going to be looking into and researching crypto? That's where I think we're going to need to look for to see, is the price going to keep going down? Is it going to go ahead and rally back up? But again, my most concerning thing about this whole thing is I still think that this is a news headline that's trying to grab everybody's eyeballs so that something else is moving on in the background you'll never hear about.
Yeah, no, I agree. I think it's a diversion. I think it's very important that people realize that NATO has not got a good look on itself, especially since what happened in Afghanistan 6 months ago about supporting its allies. Now, I'm not attacking any politician. I'm not attacking any nation, but the fact of the matter is the government that was propped up by NATO in Afghanistan fell, and it made NATO look crazy because they couldn't stop that from happening. Now we're seeing advancement going into Ukraine. Now we've also seen, China to make all kinds of talks about invading Taiwan. They've been talking about that for the last 6-7 decades. So the question now is, as Tim is saying, is what's going on in Russia going to be a smokescreen for China to try and make a move on Taiwan? And if they do, here's the thing, 92% of global chip production happens on Taiwan. So if that happens, that's a really big deal. So I'm not trying to fearmonger here. It doesn't look like China is trying to do that right now. There's no news on that. It is just a question. Is this going to end up being a diversion for something else to happen in the rest of the geopolitical landscape? That's what I would say to that. If you're enjoying today's stream, by the way, hit that like button. Let's see if we can't get to 750 likes. We very much appreciate you guys liking the video, because when you do, it helps to promote this video in the YouTube algorithm so that we can get our content out to more people that maybe will be enjoying it. But Kelly, I want to hear your thoughts on this. What is Putin trying to do? Because when Putin does what he's doing right here, he has a lot at stake. I remind you guys again of the Nord Stream 2 pipeline going from Russia to Germany. If you don't realize why that's a big deal, let me explain it to you. The current pipeline, I believe it's called Nord Stream 1, connecting Russia to Germany, basically is one of the major thoroughfares, one of the major arteries that Russia delivers natural gas to Europe. Europe gets a lot of its natural gas from Russia, and a large part of its economy is built on mineral extraction and natural gas extraction and refinement and oil extraction and refinement. They're an export economy of raw resources. That's what they've always been. So they stand a lot to lose if they go to war with you. Well, they're already at war with Ukraine. They have been for 8 years, actually. You might not have known that. If they go into a conflict with Ukraine, they get all these sanctions on them, and they start losing the ability to export into Europe, that's going to cost their economy multiple percentage points of their entire GDP. So why does Putin think that this is worth it for the amount of the amount of economic damage that it could do to his own nation when his own nation is still struggling from the Great Recession?
Well, here's the deal. As Tim would put it, I'll say something and then patiently think about it. And at the end of the day, there's so many different pieces on this chessboard, checkers board, whatever game board that you want to play on. And I watched a lot of political dramas in my 20s, and I even studied anthropology at Columbia University. And which the reason I bring that up is because all these things, like, we have no real idea what's going on. And Tim just alluded to that beautifully, in that whether or not this is specifically done intentionally to take our eyes somewhere else or not, I feel like is a little irrelevant, because at the end of the day, we're not really going to know what the true motive is. However, as you just pointed out, Jebb, I think the fact that there's so much at stake for their economy if they were to do something to upset that apple cart, I think a lot of it is just this global checkers and chess game, putting pressure just enough to get a future. There could be some other treaty in the works. There could be some other political discussion or negotiations about some topic that's coming up in the future. And it's all of it's very calculated in how and why, what they're doing. But the truth of the matter is, all we can do is speculate. So while it's good that we dive into our minds and try to understand what's going on, at the end of the day, as traders, as investors, which is what this channel is about, all we can do is, yes, we can speculate on what, where, and why. But at the end of the day, we really want to, I'm not going to say at the end of the day anymore. Essentially, we really want to focus on how is this playing into market sentiment in terms of confidence of where the market's going to be. And of course, we want to speculate on what, where, and why, so we can forecast how it may impact the market. But at this stage in the game, I think it's a risk on sort of narrative right now, in that, not that Bitcoin is a risk on asset, but I'm saying that we have to play the market like traditional market participants are playing it, because there's so much traditional market money within Bitcoin right now, especially with a lot of the institutional adoption, publicly traded Bitcoin companies, so many whales that are involved, and big money, smart money, and they're trading it very similar to traditional stock assets, traditional markets. So we need to play it similarly in that, like right now, especially with the trend being it's completely undefined right now, because we're in a sideways market that's basically been ranging $30,000 for over a year now. We're still within that trend, right? We're still within that range. And so every time we get any little $200 or $1,000 uptick, everybody's like, it's a market reversal. It's a trend. The uptrend's coming back. Well, I would say it's essentially a no, like for me as a trader, it's a no trade zone until we get a confirmation one way, whether we break above 45 with confidence, retest up into the 52, or we break down 29,000. At this point, and I'll show these metrics in a bit, but we have a very clear defined floor with where the realized price is as well. So I think right now it's at the end of the day, we really just need to make sure that we understand that it's a choppy market. We're not really sure what their intention is. We need to really let this play out, let Biden and Putin basically come to terms with what the direction is, and we can only play the news as it comes. So I would just say really sit back and let that narrative shape itself, because we're not going to understand it. We don't know what pieces of the chessboard they're playing with right now.
Absolutely. And I think the thing we have to remember, guys, is that, yes, this is definitely an escalation. There are troops that have moved into Ukraine. I will not call it an invasion because I don't think that it's escalated to that point yet. Joe Biden has not called it that either. I do, however, know that this is the kind of thing that Russia would do if they wanted to invade. This is the kind of thing that they would do because this is politically correct in a different kind of way, because they can do this because, oh, they're just backing separatist nations that want to be part of Moscow. They want to be part of Russia. Here's the deal, guys. We want peace. We don't want conflict. And we also want peace in our own minds. We don't want conflict in our own minds. You see what I mean by that? We want peace in Eastern Europe, but we also want peace in our own spirit. So we're praying a lot for what's going on in Ukraine right now. We know of some missionaries over there. We're praying for them. Please join us in prayer for them if you will. We want peace over there. I do not want to come on this channel and spread fear, uncertainty, and doubt. I do not want to come on this channel and spread anxiety. I do not want to come on this channel and say, oh, well, guys, guess what? World War III is about to start. That's not what I think is going to happen, to clarify. And I don't want to spread disunity in the cryptocurrency space and to scare you guys. It is, however, my job to report on what's going on in the crypto space, so that's why we're talking about this. But let's go ahead and now talk about Bitcoin, because obviously this has had a major impact on the Bitcoin and cryptocurrency markets. Let me first start by reminding you the stock market is down 10%, and whenever the stock market is down 10%, that is going to have an impact on Bitcoin. So what's going on Bitcoin right now? Well, Bitcoin had been ranging up here between $42,000 and $45,000. That was very bullish. We loved that. However, it turns out that looks like it was basically just a bear flag to push Bitcoin back to the downside. Over the last week and a half, Bitcoin has been pushing to the downside ever since the 16th of February, actually, but we really set a top up here at 46 back here on the 10th of February. We've been in a falling wedge now. This falling wedge will likely actually break to the upside, especially if the stock market continues to have a resurgence as it has had over the last couple of days. And by the way, guys, if you haven't already, smash that like button. Let's get to 1,000 likes here in the next little bit. Helps to promote the video in the YouTube algorithm. Thank you so very much for that. I do actually think that Bitcoin may bounce here bullish out of this falling wedge as we start to see more people realize, okay, the stock market isn't taking as big of a hit from this as we expected it would. Some people would say that we may already have what's going on in Russia and Ukraine priced in to the stock market, and if that's the case, then it may actually be priced into Bitcoin by now, but we'll talk about that a little bit later perhaps. Now, what I do think is going to happen is that if Bitcoin breaks bullish out of this falling wedge, it's probably going to come up and test $40,000, and then I think it's going to drop. At this point, guys, if the Russia-Ukraine news continues to spread FUD in the cryptocurrency space, if we continue to see the stock market suffering as a result, and we continue to see the traditional investor, both retail and institutional, refusing to get into the cryptocurrency space, I think we're going to go back down to $33,000. And the reason I think that is because Bitcoin had an attempt, it had an opportunity to rally up here to $52,000, and it didn't take it. It failed. We only got to $46,000. We barely recovered the high that we had set just a month ago in mid-January. So if we don't see Bitcoin start breaking $40,000, $42,000, $44,000, $46,000, all the way up to $50,000 confidently, if we don't see that, and I'm talking about soon, I'm talking about in the next week or so, we're probably going to see a drop down to $33,000. So we've got a lot of TA that we want to break down, but Tim, I would love to hear your thoughts on that. Do you think we're going down to $33,000? And if so, why?
I do. I think we're going to go there, and I think again we started it nicely with the news of Russia moving into Ukraine. Again, I think a lot of the price action happened before that, but that has put a lot of fear, uncertainty, and doubt. It's not going to make people in a good place to buy. As Kelly just said here a little bit ago, this is kind of a no-fly zone. I'm not saying sell necessarily, but it's also not a great time to buy. As you pointed out, Jebb, we are in this falling wedge, but what I'm seeing is, despite the fact that the volume is semi-up from where it was here back on the 19th of February on the 1 hourly chart, around like, mid-morning, I don't necessarily think there's enough volume to really present a rally yet. I think we're going to probably resist here somewhere in the area of 38.4, 38.3. Maybe we have a wick breakthrough and come up to 38.7 or something like that. But ultimately, I think there's a lot of things developing that says we're going to go down again. Also, I said this yesterday, and I'll say it again. There's something about these trends, and there's something about traders. They're going to be looking at this, and they're going to look for situations to make it happen this way. The reason RSI is so strong is because it gives you a great representation of what is kind of happening, the power behind every single trade, the power behind every single buy, the momentum, everything else. There's only one time in history the daily chart did not have an RSI divergence. I've talked about this over and over and over and over again, and at one point, I gave up. I was like, oh, maybe we have enough pressure to not have it happen this time. That's weird. We'll look back at it in history. But what we're seeing happen right now is we are not that far away from setting a lower low on the daily chart, but the RSI is not going to make the same break. This is actually a beautiful thing. This would set up daily RSI divergence because despite the fact that there's a lot of FUD articles going on in the news right now, like Russia, like what's happening in Canada, like what's happening all over the place where people are trying to write articles saying Bitcoin could go down to 10,000, maybe 20,000. There's so many bullish things happening. We have states starting to write up bills to pass that Bitcoin could be used for taxes, can be used for so many different things in their states. We have countries, despite all of the conflict going on right now, we have countries legalizing / saying we want to make sure our language is clear about Bitcoin so that people can start investing. There's so many things that are pointing towards long-term bullishness that these bigger investors are going to say, hey, I want to get in. But what happens with, and I haven't said this word in a long time, I said it yesterday for someone's sake, but the composite man, you have to treat the market as if there is like one entity kind of influencing the price to make it do something it wants to happen. They know that 33, 34, somewhere in that region is well within reach. It's very possible. They know a lot of people are kind of frozen right now due to all the FUD stories. Watch the price come back down to around 33. It's going to make a lot of people say, all right, I'm out. We're in a long-term bear market. Then they can buy because they see all those long-term fundamentals, and they're willing to wait. They're willing to hover at 30,000 or 40,000 for the next 4 months. The question is, are you willing to hover there? And so they're going to buy low. They're going to build up their supply, and then the price is going to go. We're going to set up that daily bullish RSI divergence, as I just talked about right here. And then the price is going to go. It's what we saw happen back over here but in the summer between May and July. We saw the price give us a little hope right here on the 15th of June before we crashed back down. We set up our daily RSI divergence, and then guess what? Look at this right here. Daily RSI, uptick in RSI, but a downtick in price. This set up a nice little explosion to go back towards an all-time high. I'm seeing everything kind of lean towards the exact same thing happening right now. 20,000 is definitely possible. There's a case for it, and I actually want to show you guys real quick. I don't think it's going to happen, but I do want to do due diligence and let you guys know there is a capability that we could go lower, and this was found actually by, I saw Plan C repost this. Kelly, what was the guy's name that posted this link on Twitter?
Kevin Svensson?
Say it again?
Kevin Svensson.
Kevin Svensson. Okay, sweet. So look at these lines. I'm going to actually go out to the weekly chart and show you these different times. So if we count this time right here, this would make 5. But 4 times in the history of Bitcoin's price, let me try to make the screen a little pretty for you guys. 4 times something has happened to Bitcoin in the middle of downtrends. Okay? That is, we crossed below the 50 weekly SMA. So let me go ahead and pull that up for you guys. That's that yellow line right there. So you guys are going to see right here, we crossed below. We weren't quite done with our bear market. We kept coming down. Right here, we crossed below. We weren't done. We kept coming down. There's a couple times we crossed a little bit below it and go right back up. So that's the hope we're talking about right now. Could we potentially, we need a nice rally. We need a quick rally, get back above it really quickly. We'll see. There's only 4 times that this has happened in history, so this is not by any means the strongest indicator or example we've ever seen. It's only happened 4 times, but that's something you have to be aware of, is that historically, 4 times before this, when we crossed below this 50 weekly SMA, we ended up going a little farther down. There's no exact number. It's not like it went down by 20% every single time. But theoretically speaking, that's where I could see our price coming down in this region of around $20,000. Some people have called it that. I'm not ready to say that for sure will happen, but it is something that I think would be wrong of us on this channel to not let you guys be aware of, that there is a potential that we could go down to 20,000. But that being said, one of the other favorite words we say here all the time, I still think there's a very strong possibility with all of the on-chain metrics that we've seen being bullish happen over the last couple of months, with all these new adoption stories that don't spell immediate bullish news, but they spell long-term bullish news. It would just make a lot of sense to continue to put out these FUD stories, to continue to highlight everyone calling for a $20,000 or $10,000 Bitcoin, and then people end up buying around the $30,000 to $33,000 region to spike it, have a spring, and go back up. That's just my opinion, and that's what I'm seeing, but I wanted to make sure you guys had the full details.
Yeah, no, absolutely. And I think that's something that we have to take seriously, guys. I think it's very important to realize that Bitcoin is actually down on a year-over-year basis. A year ago, Bitcoin was trading higher than it is right now. That 50 moving average is basically, if you change it a little bit to a 52-week moving average, and you're looking at the average price of Bitcoin over the last year, Bitcoin is below its average price over the last year. That average price is about $45,000. Bitcoin's currently at $37,000, $38,000. So you need to understand that Bitcoin very, very easily can trade sideways for a long time here, and it can go into a bear market. I don't think that's going to happen, to be clear. I do think that Bitcoin will hold $30,000. I would be very surprised if it went below $30,000, but at the same time, there is an opportunity that it could do it in the same way Bitcoin went below $6,000 in 2018. It didn't stay down there for long. After it did that, it got massively overextended to the downside. An equivalency would be Bitcoin going down to, say, I don't know, $25,000, going down there for a little bit, bouncing and rallying. The other thing you have to keep in mind is that the amount of people that are hodling Bitcoin right now just hit an all-time high. Kelly's going to talk about that in a second. The supply is very, very low. The demand is going to go up as people realize, hey, look, the U.S. dollar is unstable because it's getting inflated into oblivion, and also because the U.S. dollar gets inflated even more during wartime. And if there is something that's going to happen in Eastern Europe, that is going to have a big implication on the amount of money printing being done, because the U.S. government's going to try to stimulate the economy. So there's a lot of things impacting Bitcoin's price right now. And the thing I want all of you to remember is that what is impacting Bitcoin's price is either one, FUD that doesn't have anything to do with the Bitcoin market, or it only has to do with the Bitcoin market indirectly, as the Russia-Ukraine story does, or two, what does have an impact on the Bitcoin market are long-term bullish fundamentals that just haven't been priced in yet. Because the thing to also keep in mind is whatever the market is doing, the market is following what news story agrees with the current direction. So if you're going to the downside, the bears are going to say, look, bearish news, sell or short. And they're not going to be able to, they're not going to lose to the bulls, because when the bulls hear, oh, bullish news, the bulls aren't going to say, okay, great, bullish news, I'll go buy. They're going to say, no, it's a downtrend. So even the bulls are only going to listen to the bad news. That's what you see happen whenever you're moving to the downside, or if you're moving to the upside. Whenever you're in a strong trend in the cryptocurrency market, it's like a snowball. You roll down the hill, you don't roll up the hill. You roll down the hill and you start picking up more reasons to roll even faster. As the snowball rolls down the hill, it builds up more and more and more and more and more. And that's what we've seen Bitcoin doing over the last 3 months. It rolls down the hill, picks up another news story. We see Federal Reserve coming in and having a meeting. We see Russia-Ukraine coming in and wanting to have conflict. We see all of these different stories build up and build up and build up. And then you see it just get stronger and stronger and stronger. Eventually, that snowball will turn around. The market will turn around. But right now, the bearish stories are really bearish when they really shouldn't be, and the bullish news stories are getting ignored. But just keep in mind, those long-term bullish fundamentals will be heard eventually. No matter what Bitcoin does over the next 3 to 6 months, whether it goes into a major, massive correction down to $20,000 to $25,000, maybe to $30,000. Even if it does that, it is going to have a major rally out of that, and we are going to see Bitcoin go to $250,000 to $1 million in the next decade. I firmly believe that much is going to happen. Now, Kelly, I want to throw it to you. I know you have some on-chain things that you want to show us. What are your current takes on the cryptocurrency market? Do you agree that we're going down to $33,000 as well?
I absolutely agree that it's more than likely that we'll touch down, whether it be a wick or a few days. I definitely think we're going to bounce down to the 33, 34K range. Could even go down as low as 29 in the sense of keeping a bullish narrative. But I want to go through a couple of metrics that kind of paint the picture both sides. And for anybody that questions or wonders how and why we come to the decisions that determinations that we make, what we share on stream. At the end of the day, we don't necessarily have a bias one way or another, other than the bias that Bitcoin is going to be up and to the right over the long period of time. And the noise that we look at when we zoom in, yes, we're going to have massive price oscillations up and down. However, we're looking at data, and we try to paint our picture and our narrative based on all the data we see. So I'm just going to show you a couple of different things that show the narrative kind of in both directions. So this is a tweet from TXMC, and this if I were to zoom in on this, it's kind of hard to tell, but it's basically we just hit an all-time high for short-term holders. Having held longer than 6 months. So this is interesting because this means that even newer holders are starting to just as I mentioned earlier, to shift their mindset from just trading every swing. And people are realizing that the holding, hodling, and maintaining custody of your coins for a duration rather than trying to trade in and out actually ends up being a lot more beneficial to your portfolio. The next one I want to show here, this is a great chart from the Real Plan C on Twitter. This basically shows this blue line here is a long-term holder cost basis, and this red line is a short-term holder cost basis. So the red would be at what price the short-term holders are above or below the average entry for all short-term holders, and the blue is if price is above or below what the average amount of money, the average cost of Bitcoin was for the average long-term holder. And you can see we still have, we're still very bullish on this, but that does suggest that we still have a long way to come down if we were to try to retest that in any sort of regard. The next thing I wanted to show is this is just and I said this straight up, the noise of price movement on the smaller time frames is inconsequential in the long run, because we're seeing right here, this isn't just addresses, this is the number of addresses in accumulation. This is the number of addresses still accumulating Bitcoin. And you can see, regardless of this price movement coming down, what is this doing? It's going straight up. If that's not a divergence, I don't know what is. That's incredibly bullish. And I have two more quick things I want to show. I'm actually going to turn off this volatility momentum, and just looking at these bands here, all these bands that I posted here, this is in the workbench on Glassnode. These are fib multiples of the realized price. And as you can see, the realized price right now is basically a floor of about $24,000. And the extreme floor, which we have touched, like for instance, in this Black Swan for March 2020, the last bear market, and even in the bear market in 2015, that was like the extreme bottom of the bear market. If we go into a bear market, and that's all the way down around $19,000. So we do have room to the downside if we were to go down, but I don't think it's going to be this 8K, 10K, 12K like some people are calling for. I honestly think that the 33K level is going to hold. This is just a bizarre correlation. I posted this the other day. I just updated it today. This is a comparison of this M pattern that we're in right now in Bitcoin compared to an Amazon pattern that played out in 2009, where a lot of people were comparing a similar pattern Amazon had in 1999 that went into an extreme bear market. This M pattern on Amazon in 2009 actually followed through. It reversed to the upside. And I just want you to see the correlation here, and just this sharp uptick, rounding top, sideways action, basically a peak, sideways action down to a reversal. This is exactly the same play out. And if this were to be true, and I'm not saying this is, I'm just looking at the similarities, then if we were to follow this similarly, this still had a huge wick down. Mm-hmm. And if we were to do that, we would test down in the 29 to 33K region if this were to play out. And even looking at this VWAP, you see very, very similar activity. And then the momentum waves here, we're basically playing out a very similar thing. And again, I'm not saying this is an absolute must, but in any time when we're trying to do technical analysis or fundamental analysis, we try to find any edge we can. And yes, Amazon and Bitcoin are entirely different assets. I agree. The point here is, and Jebb can tell you as well, because he's been doing technical analysis basically his entire time in the crypto markets, and we have a whole course on it, the CT2A.
CT2A.
And the point with looking at charting patterns and technical analysis is there are certain patterns that play out regardless of the asset, whether it's a descending wedge or ascending wedge or head and shoulders. It doesn't matter what the asset is. They have a tendency to play out in similar ways. So when you see patterns and other asset classes, it's kind of irrelevant. But it's interesting because you can find a bullish narrative and a bearish narrative. And it's great to look at both of those because you can see what an estimated sort of range or sort of pattern that may follow through to the upside or follow through to the downside. So in this case, I do think that we still have room to the downside, especially getting people to that fight. Even me, I tend to be somewhat bullishly biased, but the fact that I'm starting to somewhat question where we're at, and that for me, that's kind of a signal that maybe, hopefully, that we need that last little flush out to the downside, make me really pissed off about price, and then it'll go up. Yeah.
Yeah. Well, I think so. There is a lot impacting Bitcoin right now, and I think sometimes it's a good idea to just pull back and take a look from a 30,000-foot view on Bitcoin. What are the major brush strokes going on Bitcoin? I'm going to say this, then we're going to move into our community discussion. We're going to read some super chats if we have any. And the thing I want you to keep in mind, there's short-term technicals and fundamentals, and there's long-term technicals and fundamentals. Let's start with the long-term. That's the simplest. There's long-term technicals say up and to the right. The long-term technicals have always said up and to the right. Long-term technicals and on-chain say that. We see that the number of people hodling Bitcoin for more than 6 months, nearly at 80%, all-time high levels. Haven't seen that since October 2015. Exactly what Kelly was saying. That's an amazingly important on-chain metric that he was telling you about. The long-term technicals say that Bitcoin is becoming more and more and more like digital gold every single day because the supply is drying up as the demand continues to rise. That's why you see the price go parabolic over the last 10 years. So long-term technicals and fundamentals, absolutely resoundingly bullish. Short-term technicals and fundamentals and on-chain. Short-term technicals on fundamentals and on-chain say, in the on-chain category, remarkably bullish. In the technical category, not very bullish. Why is the technical category not very bullish right now? Because the fundamentals are so skewed. The thing is, the fundamentals in the short term are actually pretty back and forth. There's bullishness and bearishness going on. We're seeing major states talking about adopting Bitcoin and cryptocurrency, but at the same time, we're seeing geopolitical firestorms like what we're seeing in Eastern Europe. There is a lot of FUD going on in the short term. So how do we internally process all of this, and what do we do in a state like this where the long term is absolutely remarkably, resoundingly bullish and is basically guaranteed that Bitcoin is going to go into a gigantic bull run towards $1 million in the next decade? How do we balance that with the short-term bearishness where Bitcoin could go down to $30,000 to $33,000? Here's how. We use the short-term price fluctuations, and we do our very best to trade it if we're traders. There is a clearly defined trend on Bitcoin right now. It's a bearish trend. It's a downtrend, and it has been ever since February 16th. So I would say it's a little bit less certain of a trend right now than it was a month ago. A month ago, it was a very clear downtrend. Right now, we did have a bullish buy signal a little while ago. It's a little bit more confusing than that. But there is a trend, so if you're a trader, that's great. If you're an investor, what you need to do is you need to say, okay, short-term Bitcoin keeps going down. So how do I use this short-term bearishness to prepare myself for that long-term bullishness? I'm somebody who's going to hold my Bitcoin for a decade or more. I'm not going to sell my Bitcoin until I'm spending it at the grocery store, until I'm buying a house with it, until I'm actually using it as my daily driving currency. That's what I'm doing with my Bitcoin. What we can do is we can start dollar cost averaging the dip. And that's kind of the major takeaway I want you to have is I want to give you a lesson in how to actually work in these markets. If you're enjoying today's show, by the way, smash that like button. What I would do in this state, and this is what I'm having members of my family doing. Shout out to Luke, my brother, if he's watching right now. He just started dollar cost averaging as well. He watches the show every day. What I would be doing right now, and this is not financial advice, I do heavily encourage you to get a financial advisor. In fact, we have a CPA who works in cryptocurrency. His name's Lorenzo. Free shout out to him. Check that out down below. I do encourage you to talk to a financial advisor. I'm not one, but I do think dollar cost averaging is a good idea, and here's why. Whenever you dollar cost average, what you're doing is you're taking, say, 10 investments over the course of 10 weeks on every Friday, and you're averaging your entry price. So if you have an entry at $40,000, $39,000, $38,000, all the way down to $30,000, your average entry price is going to be $35,000. If the market is dropping, what you can do is you can set up a buy every single Friday. Friday is statistically the best day to do this. Every single Friday, you can do it on Coinbase, called a recurring purchase. Drop your average entry price. Cardano is a great example right now. Cardano is trading at 85 cents. The lowest has been in a month and a year and a half. If you do that, you average your entry price lower and lower and lower, you're going to drag down that average entry price and get yourself set up for that next 10 years. So when there is bearish short-term fundamentals, technicals on-chain, bearish trend on the short-term, by short-term I mean less than a year, and there's long-term bullishness in the project you're investing in, best thing in my opinion is dollar cost averaging. So if you're wondering what should I be doing with my portfolio right now, is if you have money on the sideline, if you are able to pay your bills, if you are financially sovereign and you're in a position where you have control of your finances to where you can put in $50 a month, $100 a month, $200 a month, $1,000 a month into crypto, I think right now is the best time ever to start dollar cost averaging into Bitcoin. That is my opinion. Tim, I would love to hear your take on what we should be doing with this market right now, and then we're going to read some super chats and move into our next segment.
Yeah. So we talked about this several times on the channel. If you think you're going to get the exact bottom to buy, you're probably not. And if you think you're going to get the exact top to sell, you're probably not. You got to think about this stuff in long-term, long-term thoughts. You know, even yesterday, and this is kind of changing the subject, but I want to, bring it up. You know, Jebb talked about his buy at Cardano at 115 and how much he loved that buy, right? I posted something on Twitter a little bit ago. I bought a large amount of Cardano at $1. It's down. Our portfolio's in the red. I think with that large purchase, it brought my average Cardano buy down to, I think, about $1.03. Here's the thing. Right now, I'm in the red. Right now, Jebb's in the red on Cardano. When we think back on this 3, 5, 10 years from now, and we're playing with, well, did you buy it at $1 or buy it at 80 cents? It's like,
and it's trading at 25 bucks.
It's like, I guess I'm not as good as the people that bought at 80 cents, or let's say it keeps going down. I know there's an argument to be made that it could go all the way down to 50 cents. And we're going to talk about that stuff in the afternoon video. Didn't mean to make this Cardano bit. My point is, people are thinking so much about what their US dollar portfolio looks like, and that is a mistake. Look at your wallet and say, how much Bitcoin do I have? How much Ethereum do I have? How much Cardano do I have? How much of these other projects that I really love do I have? And then you look back at the chart and say, oh, look, it's on sale. I can add more. Stop paying attention to the US dollar amount in your portfolio. Keep your eyes on how you can attribute and get more supply. And the reason I say that is because that's what the whales, that's what the institutions, that's what the composite man is doing. They are saying, how can I get as many Bitcoin as I can? And if I can get the price to come down and get more of it, that just means I get to buy more. If the price keeps going down a little bit more, I'm fine with that because I know the long-term trajectory is up and to the right. I guess for you guys, up to the right would be this way. Stop thinking perfect bottoms, perfect tops. Think good buy spot and get that supply higher and higher in my account.
Yeah, absolutely.
All right, we got not that many super chats. I want to make sure that I didn't miss any while I was talking. But yeah, no, we don't really have that many. We did have a good chat that I'm going to read here in a second. Shout out again, though, to Johnny Lacaze.
Yeah.
He's a Jedi youngling. You want to welcome him. Thank you so much. But anyway, so we have some super chats. Nathan Sherwood said, Coinbase is a partner of the World Economic Forum. So we were talking about Coinbase earlier. Do you have any thoughts on that, Kelly or Jebb?
I don't.
Yeah, it's more of a statement, so yeah.
I have no thoughts on that. No, I think so Brian Armstrong, the CEO of Coinbase, is the only thing I will say about Coinbase is that Coinbase is a very powerful company in the cryptocurrency space, and I think Brian Armstrong is overall a very positive influence for the cryptocurrency space. That's what I'll say about Coinbase right now.
Okay. Here's your second super chat, but then it had a comment underneath it. So Crypto Alchemist said, level with me. You called a bear market that wasn't as powerful as previous cycles, but with alts down 75%. When do we call it a bear market? DCA for the win, by the way. And then he wanted to clarify. He, added me, said at TA Tim. Continuation of the super chat. I know this is more black swan events based, but do the outside factors not matter if it's the cause of the bear market? Bear market is bear market? ?
Well, bear market is bear market, and I think this is mostly directed to you, Tim, so I'm going to let you answer it. But the thing is, I'm not saying that it can't become a bear market. What I am saying is that it has not had the signals that it is a bear market right now. It's very easy to look back. Let me put it like this. Let me show you the chart. In Bitcoin's history, if you look back with the benefit of hindsight, it is literally just as simple as saying, oh, it was that day that the bear market began. Here's the thing. Let's look at my chart. Let's look back at 2017. Bear market technically started December 17th, 2017. We look back with eyes from the future, and we look at that. Let me just ask you, does this look like the beginning of a bear market right here if I just take away the rest of the price action? It's December 16th. Actually, let's fast forward a little bit. It's December 17th. Do you know that a bear market just started right here? Do you know? In fact, let's fast forward a month. It's now, we're at December 31st. Let's fast forward to mid-January. Do we know that this is a bear market yet, January 9th? It's a month after the bear market started, but we don't know that yet. At what point along this trend do we know that we're in a bear market? I'm going to be honest with you. I was in the market back then. I didn't say, hey, we're in a bear market until right about here. several months into it, when Bitcoin had dropped 60 or so percent, and we had seen the sentiment completely and totally collapse. We have not seen this market move in a similar way to what we saw back then. We've seen a healthy correction that we saw earlier on in 2021 that then led to a doubling of the price action. So until we start going below $30,000, I'm not content to start calling this a bear market. Now, in 3 years, we might look back and say, okay, well, Bitcoin did this number and then went into a massive bull market in 2023 and 2024. And then we'll say, yeah, sure, November 10th was the beginning of the bear market. Without the future and the benefit of hindsight, we can't say that. So until we go below $30,000, I'm not calling this a bear market. And in fact, I'd be hesitant to do it even down there because because you don't see the fundamental developments going on in the Bitcoin market like you see right now. You don't see that. That's not what a Bitcoin bear market looks like. And I understand we've only had two, and we're in a completely different industry right now than we were 4 years ago. I know that. I've watched the industry grow. But you don't see state-level adoption going on an asset during a bear market. That is very strange to me, and I would need a lot of convincing to say that we're in a bear market right now. That being said, if we drop below $30,000, then I will be very open to calling it that. Tim, I'd love to hear your take on it because I think he's actually referring to some of the things that you said earlier.
Yeah, so well, as far as Black Swan event, yes, absolutely. I would say if war does break out, and I'm not just talking about shots fired, I'm talking about war, countries getting involved, NATO getting involved, yada yada yada. That's a Black Swan event. I don't think that really has anything to do with what you could have planned on. That's something that just happens. Go to my chart real quick, Smay. Here's something that people need to remember. Again, when in doubt, zoom out. We have been watching now for a couple of months since November, the price go down, 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 and it's really discouraging, and it just really hurts us, and we're like, gosh, I hate this. But on the weekly chart, we are still setting higher lows. This is something that alone does not say that defies a bear market. But what it does say is there's still a case for saying this is just a correction in a long-term uptrend. I also believe, and again, this is a little bit, I want to hear from Kelly and Jebb and tell me, listen, I'm very open to them saying, Tim, nope, you're wrong. That's dumb. Don't say that. I've only been in the market now for about a year and a half, but I've done a lot of back analysis. And another thing that I think is going to happen as we watch the news, as we watch what's happening, I think the days of ridiculously long-lasting bear markets and bull markets that are predictable are done.
I agree.
I think that what we're actually moving into is a lot more stability of Bitcoin that actually allows us to be a little bit more stable. Is Bitcoin still volatile compared to the stock market? Absolutely. But is it anywhere near as volatile as it used to be? I don't think so. I think it's going to I think we can see price drop a little bit here over time, but then as things adopt, and especially as people want more and more and more Bitcoin, which is what the season we're in right now, I think you're going to see people get shook out at every level. I think that Bitcoin's still volatile to a degree, but I think that the I think the long-term 2-3 year bear markets, 2-3 year bull markets, I think that might be done. I think now it's in a question of, hey, is this a good time to buy? What's the US dollar doing? What's the Chinese yuan doing? What's the British pound doing? And we're buying against it because I think people's eyes are starting to wake up. Everything we've seen happen in the news right now, people's eyes are waking up to the danger of fiat currency, and they know they need to hedge against it. And Bitcoin is proving to be a very good source for that. So I agree. I think, Jebb, if we go below 30,000, guess what that would do? It would give us a lower low. Now we can start saying, all right, is this a bear market? But until that point, we're still setting higher lows.
What it is, I've been saying for a year and a half that I think the 4-year cycle is over. The cycle based on the halving is over. And I completely agree with you, Tim. I think that we're out of the whole idea of, we're going to have a 4-year to the upside, then we're going to have a year to the downside. I don't think that we're moving in that direction anymore. I think that what we are seeing is that we're going to see what happens in the stock market where we're normally rising, but then every once in a while we'll go down for 3, 6, 12, 18 months. And you see that you're mainly moving to the upside. I think we're maturing as a market and as an industry in that direction, because I've talked about this before. The entire cryptocurrency market is like a giant spider web. You have so many different facets of the crypto market that were not there in 2017 and 2018. You have the metaverse, you have DeFi, you have blockchain gaming, you have NFTs, you have all of these different areas. You've got the massive YouTube space, institutional adoption, you have state level adoption, all of these different, sticking points, holding on to crypto, holding it up. None of them existed in 2018. Kelly remembers this. You were here back then. Back then, the only thing that mattered was Bitcoin and the ICO space. And as soon as we saw December 17th come around, Bitcoin began going into the downtrend, the ICO space disappeared. everybody stopped working on that within a month or two because one, BitConnect went down, and that put a very sour taste in all of the investors' mouths. And then we saw everybody say, you know what, there's not as much money in ICOs because everybody's clutching their pearls. And we saw that it was just Bitcoin, and Bitcoin was on its own. Through those ashes, the phoenix of the future crypto market started to rise, and we saw DeFi come around, saw dApps come around. Now we see algorithmic stablecoins and NFTs and metaverse and blockchain gaming and all these different industrial applications of blockchain tech. We didn't see any of that for a year in 2018. Kelly, you'll remember this. We would not stop talking about Bakkt the entire year. The only news story that mattered was Bakkt. And finally, when Bakkt launched, we realized, wow, that really doesn't matter. And it kind of was a giant flop. There was nothing going on. It was a dead market. That's not the market we're in right now. That's not the market we've been in for the last 2 years. This is a very different market than we were in 2 years ago. And so we have a lot more support for the Bitcoin price. Bitcoin cannot go into as big of a downtrend as it did before and just drag the rest of the market with it because there's so much more support. So Kelly, I'd love to hear your thoughts on that. And I know you want to say something as well, so take it away.
There's two critical points here. One, you brought up the lengthening cycles. I don't even want to call it a theory anymore because we're already seeing it play out. Yeah. And that is the fact that in the past there was huge mining rewards that would miners would get for processing transactions, which is essentially how the Bitcoin network works. One, we're having security in the network because we have a large variety of decentralized different individual people or institutions or entities that are confirming transactions, right? And two, you have, especially back then, which is, as we've been seeing in the narrative and the news stories that we've been sharing lately, that in the past, miners would sell so they could fund their operation. They'd make money on mining and they'd have to sell some to, pay the light bill, pay their rent, pay their salaries. And now that we have the large majority of mining power in the world is now run by large institutional mining operations that are publicly traded, they're no longer selling Bitcoin to fund their operation. And so I think that's going to have a huge impact on the reason why the cycles are lengthening, that in addition to the market being much larger. But the fact of the matter is, in the past, when you had people getting 50 Bitcoin per transaction as a mining reward, and then it went down to 25, then it went down to 12, then that's becoming less and less. And the miners aren't selling to fund their operation. So the mining rewards at this point, and I don't want to say 100%, but the effect of that on the Bitcoin market, which is what was affecting the 4-year cycle. That's why the 4-year halving cycle was relevant. That's no longer relevant to what's going on with price because that's no longer having an impact on sell pressure. So that being said, we're having these longer cycles playing out, and they seem to be a little less drastic. But I want everybody to realize also, I don't think that they're necessarily less drastic. And I'm talking about especially like parabolic rise to the upside. Everybody's saying, well, we didn't get the parabolic top yet. Well, I honestly still think that we're still mid-cycle. I still think we're going to have that parabolic rise at the end. And people asking whether or not we're in a bear market, I think the only thing that I'll suggest about that is what time frame you're looking at. If you're talking about the macro cycle, we're still in a bull market. Just as Tim pointed out, we still have higher highs and higher lows on the weekly chart. If you get down to the daily, then yes, you'll notice that we're at many months downtrend in terms of, especially looking at the daily. And when as a trader, you're trading into a trend, right? So if you're trading on a downside market, you're going to sell when you're hitting key resistance levels and buy when you get very oversold and all your signals show that the momentum's shifting back for a small bounce, and then you sell at your resistance again. When you're in an uptrend, you basically are buying at your entry point when the momentum is shifting from whatever dip, and then you're selling at whatever targets you have based on the pattern projections about where that breakout would be, about where the breakout would end above, whether it be a Fibonacci extension, whether it be resistance. If we're still trading through price action that's already happened, like we will be between here and up to 64, then our targets will be mixed between the Fibonacci extensions as well as targeted breakouts, as well as old support and resistance from past price action. So in this case, we're in a downtrend. We're in a bear market as it's related to the daily or the hourly or the minute, sure. But when you're looking at the macro trend, especially for hodlers or people that are investing, we're in a bull market all the way. So you really need to understand what trend you're looking at in terms of time frame, and that's how you can really determine it. So we're in a bull trend, but we're in a bearish interim smaller trend for traders.
Absolutely.
The last thing I'll say, the other thing is we have two rounded tops, 64,000 and 69,000. Everything we've seen up to this point has been blow off tops.
Yes.
We haven't seen a blow off top. So again, could things change? Could the news change that and we go down? Absolutely. But even the charts don't really show that the market said that was the tip top, because that tip top, the blow off top is going to come from, wow, it's not just that this price is high. This price is way overinflated.
Way
and a lot of people are sitting there waiting to sell.
Yeah.
That rounded top means there's indecision. Some people think it's the top, but some people think it should still be going up.
And the thing you got to remember is that there was a lot of FOMO going into Bitcoin rallying up to $64,000 to $65,000 from the traditional markets. That did not happen at 69K. You guys remember that, right? There was not this massive influx of, Jake Paul's making a video on Bitcoin and it's on Dude Perfect and Ellen DeGeneres is talking about Bitcoin and all this stuff. That didn't happen. We got to $69,000 on our own merit, to be honest with you. It was retail and institutional adoption, but it was not. A lot of it was in Bitcoin already. We kind of got there without the rest of the world. There was no blow-off top. So that's not what the top of a bull market looks like historically in Bitcoin. And you might say, yeah, but the trend's changed. Yeah, but at the same time, that trend really doesn't make a lot of sense for it to change. Yeah. With that said, let's go ahead and read the final super chat here, and then we're going to do our predictions.
Two more, I think.
Oh,
well, we have
okay.
So Dr. Fuzzy Eyeball, who's been a member now for 5 months as a Jebb Youngling, said, can you comment on what looks like a downward fanning out shape of Bitcoin? I don't know what a downward fanning out shape.
Like a broadening wedge.
I'm assuming that's what he's talking about.
He's probably talking about a broadening wedge. It's also known as a megaphone to some people.
Yeah, that's what that was.
He's talking. I know what he's talking about. He's talking about this right here, going back to early December. We have been broadening, and I think what that kind of shows you is that we're seeing more volatility in the market, which is actually a very bullish thing. I don't. There's not a lot that I can really read into that, to be honest with you. That's why I haven't brought it up. I have noticed it. Basically, all it tells me is that we're seeing more volatility. And if there's one thing I will say that it means, is that it means that the bulls are fighting harder right now than they were at 50K. That's what I will say.
The other thing I will say is I think this whole time, looking at what the whales were doing, I think for a long time, the plan was originally 46, 42,000, because we definitely are constricting right to that level. And then things came out with the anticipation of the Fed news and things in Russia and Ukraine started to heat up and all these different things. I think not the fundamentals, but the news changed, that we were actually on trajectory. That's why we called that 42. We didn't think it was going to go below. And a lot of people didn't think it was going to go below. That's why we have whales buying $2 billion worth at $46,000. Originally, that was going to be the bottom. Something changed. The news happened. It freaked everybody out. We had this massive drop down to the low 30s in anticipation of the Fed coming out and saying, dang, we messed up. We got to raise inflation rates right now. That didn't happen. So this broadening wedge, to me, is almost like a reset button of thought. And so, we'll see what happens there. But yeah, that's why I think that is broadening like that. I think things changed. Things didn't stay as normal. They changed.
Absolutely.
Like if you're playing poker and they reshuffle the deck.
Yep.
All right, let's go. We have one more super chat from Matt C. saying, circling back, Jebb, don't you think Putin felt like this was his last chance to grab the Ukraine before they joined NATO? Because if they did join beforehand, he would be essentially attacking all the nations, and NATO would be obligated to respond.
It's one of the articles in the NATO the NATO stands for the North Atlantic Treaty Organization. It's one of the articles in the treaty that an attack on one is an attack on all. If you attack France, they're in NATO. If you attack France, you attacked America, you attacked Britain, you attacked, I think Spain's in NATO, you attack Germany, everybody who's in NATO. So the point Matt C is making, for anyone who doesn't know, is that basically Ukraine has been wanting to join NATO for a long time. NATO's been wanting Ukraine to join NATO for a long time so that NATO has a border with Russia to kind of keep Russia in its place. Russia's nowhere near as powerful as it was during the Soviet era, but it is still a threat, and Putin is making that very obvious right now. So what Matt C is asking is Russia trying to invade Ukraine before they inevitably join NATO? Because it probably is going to eventually happen. And I would say that that's probably a big part of it. Russia, I mean, Putin has come right out and said a big part of the reason that they're doing what they're doing is because they're pissed off that NATO is trying to get Ukraine to join them. So I do think that's a large part of it. What I will say is that so long as Russia has all of those troops on the border, I don't think NATO has the cojones to go ahead and invite Ukraine into NATO. I don't think NATO is going to allow Ukraine to join NATO so long as Russia is positioning the way that they are. And I think that actually is a part of Putin's motive, is to delay Ukraine joining NATO because they don't want NATO on their front doorstep. You got to think back to the Cuban Missile Crisis. It was 1963. When we saw that happening, the reason that really kicked off, and a big part of what happened there, the reason that the Soviet Union moved missiles into Cuba was because America had a bunch of missile bases in Turkey, and Russia, the Soviets did not like that there were short to medium range ballistic missiles, they were able to hit Moscow. So they wanted to put missiles in Cuba so they could hit D.C. because this was before the era of ICBMs. So it was a little bit of back and forth like, hey, I don't want you on our border, so I'm going to go get on your border. Russia obviously can't do that now because there's nowhere that they can station anything. They could not go into Cuba the way that the Soviets did. But they certainly don't want America to have a military base 10 miles from their border, on their border inside of Ukraine. Because right now, America does have some troops, does have some equipment in Ukraine, but if Ukraine joined NATO, I guarantee you, Ukraine would say, yeah, America, come set up FOB's forward operating base. Go get a Marine base here. Go, drop 45 F-35 so that you can go and, do whatever happens to Russia. And so there's an air war. That would absolutely happen. Russia's terrified of that. So yeah, I do think that's part of it.
Last one that just came in, and then
And I am a nerd for Cold War history.
Emmanuel Tossolini. All right, great. Emmanuel. Hey guys, do you think it is safe to hold long term for 3 to 5 years? Some alts or most will be gone, similar to the .com bubble, referring to Matic, Solana, and Polkadot.
I think that Matic and Polkadot will still be here. I do have my questions about Solana. I think that Solana has done very well for itself over the last 2 years. I think Solana is behind on tech and they're ahead on marketing, and that's not a long-term stable position to be in. And Solana's done very well for itself. It does have a very large ecosystem right now compared to a year ago. It's seen a lot of growth. I'm not denying that. I am, however, denying that it's the best at layer 1 decentralized application protocols. I even think Ethereum's better at it than Solana is because Solana was built so hastily, has so many centralization concerns, and I think Cardano is much better at layer 1 than Solana is. Now, as to the core of your question, absolutely, I do think probably 90% of the altcoins that we're talking about right now will be irrelevant in 3 to 5 years. I've been here for 3 to 5 years. I've been here 5 years in July. So that's only, 4, 5, 6 months away. I've been here for 5 years. I've watched cryptocurrencies like Dash, like Icon, like Neo, formerly AntShares. A lot of these different projects that were in the top 10 were doing very well. Tron, that's another one. These projects are still around and they're still having some development going on, but they're basically dead compared to what's going on right now. They're not the trending projects. So if you're going to hold on to something for a very long term, for 3 to 5 years, one, you got to keep in mind your risk profile, because if you invest in only one altcoin for 3 to 5 years, you're really setting yourself up for a lot of risk, because if that one altcoin goes kaput, then you're kind of screwed. But if you diversify into Cardano and Solana and Ethereum and Avalanche and Polkadot and Matic and Chainlink and all those, then you're probably going to pick a couple of winners. So I would just encourage you to have diversification, if you are going to be investing for that long. I don't think there's anything wrong with that. I do think that you're going to see Bitcoin, Ethereum, Cardano be absolutely dominant in the crypto space in 3 to 5 years. But the further you go, even I would just say outside of the top 10, you start to get a lot of questions as to the longevity of those projects. But with that said, let's go ahead and do our price predictions.
We did. And so Smay and I are locked in. We have ours put in there. Kelly, it is your guess, my friend, and Jebb is working on his.
Let me look at this very beautifully choppy market.
Yeah, for real.
I mean, it's literally like pulling a number out of a hat.
Oh, this is a hard week to predict. Absolutely.
It is.
We're at the bottom of a falling wedge, but the news is pushing us down, and it's a fun one.
I say 35.5.
Wow. Interesting. I was going to say, it's funny. I was actually going to say 35.5. And the reason is,
that's why we got to lock these in beforehand, guys.
Yeah, no, I know.
I got these locked in here.
Locked and loaded. I'm going to say 35. I'm going to say 35.
35,499.
35,499.99.
Wait, so what's your...
My new Kia.
35 what?
3,500. 3,500? No, 35,000. If it went to 3,500, I'd be buying up so many Bitcoin. I'd be buying up hundreds of Bitcoin down there, dude. That'd be crazy.
All right. Well, we'll go ahead and, barring a miracle, this will not be sitting on my desk this week.
Okay.
The reason why is because I said 35,200.
Oh, no.
So that means I have like a $300 window at best. That sucks.
What does the money tree say, Kelly? What does the money tree believe it's going to be at? Because the money tree is the one moving the market, so it would probably know, right? It's not fair. You have the money tree to tell you where it's going to be. That's cheating.
I am Groot. He says
I am Groot.
He says it's going to be 35, 526.
Oh, okay. All right,
well, here we go. This is what it is. Smay is the lowest this week, saying 29,000. Right,
29,000.
not right above him. So Jebb's got a nice little window with his $35,000 prediction.
You are insane.
Jebb said 35,000. I'm at 35,200. Kelly's at 35,500. I want a recount.
I will give you $100 on camera if it gets to $29,000 this week.
Okay.
I will give you a Benjamin. I'll do it on camera.
This is hard. Okay. Well, you know what? It was bound at some point. I like my prediction. I think I'm going to be close, but it seems like all three of us are on the same page.
I take that back.
Because we're all within $500.
I take that back. I will give you $100 if you are right and Russia has not launched a full-scale war. If they launch a full-blown war in the next 4 days, then I fully expect it to go to $29,000.
Nope. I'm factoring all things into my prediction. So you can't
I have
do
thought
that.
through every possible scenario with everything that could ever happen, and 29,000 is it.
29,000 is it.
All I'm saying
I've
is
seen 13,745,000 realities, and only one is
you
Jebb.
can't change the deal. We already made a deal. So if it's 29,000, you have to give me $100.
Okay, fine. If it's let's get this straight. So this is the deal. If it's $29,000, you get $100. So basically what you just said is that it has to be exactly 29,000. I'm happy with that.
No, not at no. Okay,
No. Roll the tape back. That's what you said. If it's at $29,000, then you get $100.
Sure.
Well, you're saying it has to be exactly 29,000.
That's what he just said.
No, well, first of all, I didn't say a time. So at any point between now and next week.
No, this is 10:45 on Friday.
It's 10:45 on Friday. No, that's the rule, Smay. You can't back out of that either, dude. You're trying to back me into a corner. You can't do that.
All right, let's move on. All right. Wrap it up. Just in case anyone got lost and you guys are going to vote along, we want to hear your predictions as well in the comments below. You can put them in chat, but it'd be better if they were in the comments. But who do you think is going to win? Do you think Kelly's going to win with 35,500 as the highest? Do you think Tim's going to win stuck in a window at 35,200? Do you think Jebb is right at 35,000? Or are we going to have the bottom pretty much drop out from underneath us and get down to 29,000? With Smay's prediction, let us know what you think down below in the comments. Jebb,
Indeed.
Let's go ahead and wrap this up.
Tell us what you guys think. Thank you guys so very much for tuning in. We got 3,000 people watching. Smash that like button if you haven't already, and make sure to follow us on our social media at CryptoJebb over on Instagram and Twitter. We post daily to both of those platforms, and also on TikTok at CryptoJebb Official. We're going to be putting up some content a little bit later talking about Cardano. Where's the bottom on Cardano? What are we predicting it's going to go to? And we're also going to talk about where we might be looking to buy some Cardano, some ADA down at those levels. I already hold a lot of it, so I'm not quite sure how much more I really want to put at it, but I would love to hear all of your thoughts on all of that in the comment section down below. Guys, tell us in the comments, do you think that Russia is going to invade Ukraine? And if so, what kind of implication do you think that will have on the Bitcoin and cryptocurrency market? On a very serious note, guys, we are praying for Ukraine. We prayed right before the stream went live, and we're going to be doing the exact same thing as soon as the stream is over. We're praying and hoping for peace in Eastern Europe. We don't want anything to happen over there. We don't want anyone to get hurt. We don't want anything worse to happen, obviously. And it's very important to us that we live in a peaceful world. So if any of you guys are in Ukraine, if you need anything from us, I don't know what we can do, but support at CryptoJebb.com. Maybe we can help you in some way. We will continue to come here every single day and bring you updates so that you can achieve financial sovereignty here in the cryptocurrency markets, because we want you to have control over your finances, not the other way around. Before I go, though, guys, I do just first want to thank each and every single last one of you for watching, as always, and I will see you guys in the next video. Peace.